What's going on, everyone? I'm going down the rabbit hole again in terms of these key levels and how critical they are, how important they've been, and realistically, how they have kept me on the right side of the move over 80-90% of the time. What has shaken me out of a few trades this week, I'm looking and assuming tomorrow I don't, absolutely self-destruct and blow up my accounts. I'm going to finish the week positive, clearly going to be up over $3,000, $4,000 on the week, which is a really good week for me. So with that being said, there's some things that I'm understanding, and there's some things that I'm realizing is that playing these key levels, I'm able to kind of see the bigger trends play out. And what's gotten me into trouble is getting down into the smaller time frames. It's really gotten me into trouble. 1 minute, 5 minute charts, 2 minute charts. Not to say that they're not useful. They definitely are. I have found some good entries, but what tends to happen is when I'm looking at a sub 5 minute chart, so anything below a 5 minute chart, the adrenaline pumps and the choppiness, the up and downs, the wicks, the following each candlestick by candlesticks, it really plays a lot mentally. When I zoom out, everything just looks so clear. And when I look at the bigger time frame, 15 minute, 30 minute, 1 hour, things look phenomenal, right? Like there's no reason, right? Like again, I already said it. I came into the session today where if this got rejected right in this range right here, if this got rejected, I was gonna full be ready to short. But when I zoom out on the big time frame, why would I short if I'm over my demand? So my demand was 18,627. Why would I short? Right? Why would I short? Why would I short in the middle of the range? Why would I even have that thought process, right? Well, I'm looking at over here and I'm seeing, there was a couple of touch points here, which makes sense. It's definitely valid. When you start looking at the smaller time frames and you see a couple of red candle closes, or maybe you see a big wick, it can tend to kind of mess with you. But realistically, this was on full breakout mode until at least 19,075. It was on full breakout mode off the open until 19,075. Now, whatever it did after that, which obviously went to the next zone, to each his own, but there was plenty of money here to be made over 200 points on this move, where it was realistically just a buy and hold. Don't do nothing. Who cares about what the 1 minute chart's doing? Who cares about what the 2 minute chart's doing? What am I getting at here? What I'm getting at here is, and I've started to back test, right? Because we always have to kind of back test. What I'm getting at here is if I use these zones, okay, and these key levels in correlation with a higher time frame, 15 minute, 1 hour, 30 minute time frame, 20 SMA play, it's almost gold. Okay, it's almost gold. The big thing that we're going to have to work out here as a team, how much size are we going to put on? Because we are going to run into periods of drawdown. We are going to run into periods where, let's say, for example, a trade doesn't work. We're going to take a nasty hit. But when the move works in our favor, we're going to make a lot of money. Okay, we're going to make a lot of money. Let me show you guys what I'm talking about. I don't want to ramble too long. Overnight, we pulled into our demand at 18,627. You see how we pull into our demand? At 3 o'clock in the morning. Now, I'm not saying that everyone needs to be awake at 3 o'clock in the morning Pacific Standard Time. But at 3 o'clock in the morning, there was a trigger, okay? There was a trigger that we closed back over our 20 SMA. And being that we're not looking at a 1 minute or 2 minute chart, we should not get too many up and downs, meaning we shouldn't get too many fake outs where we close over and then we're closing right back under, and then we're closing under, and then we're closing right back over, right? The higher the time frame that we get, the more solid the move. The only problem with the higher the time frame we get, the bigger the drawdown we're going to be putting ourselves in. But if we use it in correlation with our zones and with our key levels here, okay, so the green boxes, red boxes are zones, the key levels are the white lines. If we use the higher time frame, 20 SMA, it doesn't necessarily turn into a scalp at that point in time. What it turns into is a trend trade where, in correlation with our key levels and our zones, we can play from zone to zone, we can play from key level to key level, and it'll give us amazing targets. So at 3 a.m. we close over the 20 SMA, and the entry price should have been 18,729. Okay, we confirm here we never closed below the 20 SMA all day. So again, are we going to get a trend day like this every day? Of course not. But on a day like this, it essentially went from 18,730 to 19,400. We're talking 700 points, guys. Even one micro would have paid $1,400. Now, here's the problem. We're not all up trading overnight. We're not going to be trading London session, right? So what do we need to do? How do we capture this once it comes into the pre-market? Well, I'm assuming most of us are looking at the pre-market at least, let's call it at least 30 minutes to an hour before New York opens. In that particular case, all we need to do is ask ourselves a couple of questions. Are we over demand? Yes. Do we have room into next supply? Yes. If we confirm going into the market, if we confirm the pre-market highs, we're going long. No ifs, ands, or buts about it. Where's the stop loss? Any closure below the 20 SMA. Very simple. So you're going to have to do the math. How many points are you going to give up if we close below the 20 SMA? From here, it was 876. A closure would have been 822. 50 points. Let's call it 60 points. Look at the down here. I'm assuming you guys can see this. Look down here on the right-hand side of the screen by where your clock would be on your monitor. Look right here down at the bottom of the screen. An ATR, one ATR on a 15-minute time frame is 48. We were risking 50 points here. Essentially, we were risking one ATR for potentially from 18,882 all the way up to 19,076. We were potentially targeting, a 200-point move, or from 876 to 976 is 100 points. Yes, a 200-point move. So we were risking 50 points to make 200. Now the question, it's hard to hold. It's hard to hold. It's hard to hold. I get it. When you're watching the smaller time frames, it's going up, going down, going up, going down, going up, going down. Uh-oh, we're coming back down. I think we gotta focus on the higher time frames, guys. This was 200 points here. That was clear as day. We should have been involved in at least 100 to 150 points of this. Let's go back. Let's look at yesterday. Yesterday, we were already trading over the 20 SMA on a 15-minute time frame. We ran into supply. We were already over our 20 SMA. There was no real trade to kind of get in here. Maybe once we swept the highs, we could have got in short. But again, if we're just talking about a 20 SMA, bigger trend, this candle right here, the range is 185 points. Okay. I don't think we need to give it 185 points. I think we can use the 20 SMA, which would have been, the low price was 18,881. The 20 SMA was 18,961. So we were giving up 80 points. One micro you would have put on risk for $160, $175. And what we're doing is trying to target that demand zone. Now, we didn't touch the demand zone here. Okay, we didn't touch the demand zone, but let's build this out, right? In this particular case from today, it did touch the demand zone. The ATR is 49.50. We got easily 50 points. So even that's a beautiful trade, right? Even 100 points is a 2-to-1 trade. That's a beautiful trade. That would have made us sell somewhere in here, which is below our supply. So if the ATR is around 50 and we're getting in short at 18,881, okay, well, in a matter of 30 minutes, we drop down to 18,797. This is 100 points in 30 minutes right here. From this low to this low is 100 points. Okay? Because this is 876 and this is 800 right here. 800 right here. This is 75 points. From here to here is 75 points. If we're targeting a 1 ATR or maybe a 1.5 ATR, we're looking for a ballpark trade of 50 to 75 points. We're looking for a ballpark trade of 50 to 75 points. 50 to 75 points. Let's go back. Let's go back. Let's go back. Let's go to the previous day before that. In this particular scenario, at 5:15 a.m. Pacific Standard Time, so this is about an hour before the market opens, we got a trigger for a long position. Our risk would have been around 26 points. If we targeted the demand zone or this supply zone, that was at 18,174 from an entry price of 18,091. This is over 50 points. This is over 75 points. This is almost 100 points. Now, if we didn't take the trade in the pre-market, what are we looking for? We can get in on the long when we break, pre-market highs. The stop loss, any closure below the 20 SMA. Like, we don't even need to make it difficult, guys. Like, it does not need to be difficult at all. The only thing that's going to make this difficult is putting on too much size and watching something pull back on you 40, 50, 60 points. And then you're like panicked, but there's no reason to get out of the trade. Like, let me give you a scenario here. This candle at 10:15 closes below the 20 SMA. However, it's closing below the 20 SMA right at demand. There's no short here, guys. None at all, right? Like no short at all, because we're not going to short if we're into demand. We need to be having space. We need space. Like this long, we're over the 20 SMA. We can fire long anywhere in pre-market. We could have fired long anywhere on the first candle. Did not matter because we're breaking and we closed over this key level of 18,178. So as long as we're over 178, we can use a 20 SMA as our stop. We have all this space to target. In this particular short position, we're getting an indicator that's firing right at demand. This is a no trade. And besides, this is already after lunch. We shouldn't be trading this anyways because we should have caught this beautiful long. So let's look at something else. Let's go back another day. The previous day. This is Monday. At 4 in the morning, we closed below the 15-minute 20 SMA. We also lost this area of demand or supply, whatever you want to call it. We lost it. We're trading below 18,178. Now, again, a lot of us are not going to be trading in this early in the morning. So when we get to the market right around here, right before the market opens, all we're telling ourselves is if we lose the low, we're in short. If we lose the low, we're in short. What's our out? Any closure back over the 20 SMA. Any closure. In this particular scenario, 18,078, we would have been getting out at 178. So we would have been risking, 75 to 100 points. If we get out over the key level, if you get out over your 20 SMA, when you close above it, you would be risking about 50 points. However, you're targeting at least a 1 ATR and hopefully 2. I mean, these things are running 3, 4, or 5 ATRs, but in this particular case, if we got in short here off the first 15-minute candle, because we're trading below our 20 SMA, we're below our supply. We're getting into this trade at, let's call it, where is it at here? Let's call it 18,075. Within a matter of, let's call it 30 minutes, we're trading at lows of 17,939, guys. 17,939. It's over 120, 140 points in 30 minutes. And that's a 2R trade. And it actually went all the way down to our demand. And we stayed below our 20. And that traded down to 17,705. And we would have been entering this at 18,068. Jesus Christ. So we're talking about close to 350 points. which is $600-$700 on one micro. You know, if you bump that up to 2 micros, you're talking about $1,200 trade here, $1,000 trade there. This one was a smaller one. But no, actually we got 75 points on that. So that's $150, $300 trade here on 2 micros. This one here, this day, going back to last Thursday, coming into the market open, we were already well below our 20 play, right? We're already well below the 20. All we need to do is tell ourselves, if we take out the swing low, we're in short. So we were in short off the open. And off the open, it goes from 18,450 down to 18,382. 100 points. 100 points. So if we target at least a 1R or 2R trade, if we target 50 to 100 points, but we're getting in on these 20 plays, again, this is not scalping because this 20 play fired at 3 in the morning. We're not going to be, you know, up every day at 3 in the morning. But when we're coming into the market, right, all we need to do is ask ourselves the question, are we below our 20? Are we in an active 20 play short? If we are, when we take out the previous swing low or whatever it is, we're getting into the trade, we're firing, we're targeting that next demand. Oh my gosh, we could have probably pulled 1,000 points out of the market with this, guys. I'm gonna trade this setup tomorrow. I'm gonna trade this setup tomorrow, guys. And I'm just looking at the 15-minute chart. I already kind of back tested it on the 1 hour chart. It looks beautiful as well. The 30-minute chart looked beautiful as well. I don't want to risk 150 points a trade, so I'm not going to trade the 1 hour, but I can handle the 15-minute. I can handle the 15-minute, and it's giving us long enough trend times, right? We're getting long enough trend times because even when the market was choppy, like here, after it's kind of choppy and waving around, this is still 15 minutes, 30 minutes, 45 minutes, an hour. We spent an hour under on the move, and the move went from 878 all the way down to 744, 130 points. So that's 2.3R, 2.4R if you sell it at the bottom. Now, obviously, you're not going to sell it at the bottom, but if you target a 1R, you target a 1.5R, you target a 2R. So when I say R's, meaning reward, I'm targeting, and we're gonna classify the 15-minute range as 50 points. Right? We're going to just classify it as 50 points because that's what's been the average. At some point in times in the day here, it's closer to 80 points. And if that's the case, if it's about 80 points when we're entering a trade, then we'll probably be targeting an 80-point move. And it is what it is. But it's going to be about 50 points bare minimum that we're going to have to give up. 50 to 80 points, I would say, would be the sweet spot. We could probably just blanket this, guys. We could blanket this and throw like an 85-point stop loss and an 85-point take profit, or you can do a take profit 1 at 50 points with an 85-point take stop loss, and then you can do like take profit 2 at 85 or 100 points, and then just basically sit in the move, and you're gonna for sure come out with 50 points. Now again, when like we have to start taking these in the real live markets. These trends are holding here on a 15-minute time frame. Here's a day where it's choppy. This is going back a couple of weeks. But I don't think we wouldn't be trading at 9:15, 9:45, 10 o'clock. This is during lunch. We wouldn't be trading this because we were already in an active short to start the market open. So our trade would have been here. Through the pre-market lows, we would have been short, targeting demand. So this is irrelevant, right? Those are irrelevant. And I just went back and back tested the previous 5 days. And we've had beautiful setups all 5 days. So for 5 days running, even if you traded 2 micros and targeted 50 points to 100 points, that's at least a $200 to $400 day minimum times 5. That's a $2,000 week. It's a $2,000 week with no stress. And I mean no stress because all you're doing is keeping things very simple. coming into the market. Are we over or under the 20 SMA? Okay, great. We're over the 20 SMA. When we take out the pre-market highs, we're firing long. Our stop loss is a closure below the 20 SMA. Very simple. Very simple. That's it. That's all you do every single day. Look at the pre-market. Was our last setup over or under the 20 SMA? In this case today, it was over the 20 SMA. Great. All we're looking for is the long. Get long once you confirm pre-market highs. Stop loss goes below the 20 SMA, targeting your upper supply. Same thing if it's short. Are we over or under the 20 SMA here going into the market? Well, we were over all pre-market here, all overnight. Great. What are we doing? As soon as we take out pre-market highs, we're targeting supply. Done. Get in once we break pre-market highs. Done. I don't even think we would have need to take this short position. We would have been long here off the open, 18,974 into 19,072. This is a 100-point move, and it went beyond. But we would have at least picked up 100 points. Absolutely insane what you see when you zoom out. All right, guys, let's fire this. Let's fire this trade tomorrow, and let's make some cash. We should all be on the same page. I'll catch you guys in the morning tomorrow.